Today, we are cracking open the mind of one of the greatest investors ever, Warren Buffett. We're going to do it by diving into a letter he wrote during a massive crisis. And let me tell you, it is an absolute masterclass in how to think clearly when pretty much everyone else is panicking.
So, to really get what makes this letter so powerful, you have to picture the scene. It's October 1987, and the feeling on Wall Street, it's just pure, uncut anxiety. The market had just been through a historic crash. Buffett himself called it a sudden, massive seizure. I mean, fortunes were just getting vaporized overnight, and the only thing really being traded was fear.
But right in the eye of that hurricane, Warren Buffett sits down and sends out his annual letter. Now, this wasn't some fluffy, don't worry, be happy kind of note. Nope. It was a firm, crystal clear lesson in rational thinking. Okay, let's get into it. So the first big idea Buffett lays out is this incredible story he picked up from his own mentor, the legendary Ben Graham, and it's a concept that is designed to completely flip your relationship with all that market chaos. He tells you to imagine you own a business with this guy named Mr. Market. Now, he's your partner, but as Buffett puts it, this partner has incurable emotional problems. You see, some days your partner, Mr. Market, is just totally euphoric. He only sees blue skies ahead and offers you a ridiculously high price for your slice of the business. But then, on other days, he is just completely depressed, convinced the world is ending, and he'll beg you to buy his shares for pennies on the dollar. And here is the key takeaway. You are in total control. You don't have to listen to him. You can ignore him completely. Or you can take advantage of his wild mood swings. You buy from him when he's scared and maybe sell to him when he's delirious. He's there to give you opportunities, not to give you advice. Okay, so if you're tuning out Mr. Market's daily trauma, what exactly should you be focused on? Well, that leads us right into Buffett's second principle, and it's all about what kinds of businesses are actually worth owning. Buffett pretty much warns everyone to stay away from what he calls exotic-sounding businesses. He points out that while it's fun to dream about the next big thing, the truly amazing returns, the ones that last, they often come from companies that are stable, predictable, and, well, kind of boring. And he wasn't just guessing. He actually ran the numbers. He looked at the 1,000 biggest companies in America at the time. And you know what he found? Over a whole decade, only a tiny sliver, just 25 of them, consistently met his high bar for excellence. Just 25. And what did these few superstar businesses have in common? Well, for one, they were almost all in what you might call mundane industries. We're talking candy, newspapers, furniture. They hardly used any debt, and they were just laser-focused on doing one thing really, really well. And believe me, this philosophy worked. That very year, Berkshire's own little collection of simple, well-run companies generated an absolutely staggering 57% after-tax return on their capital. I mean, that's a number that was basically unheard of. But you know, for Buffett, the business itself is only half of the story. The other half? It's the people running the show. And he hilariously quotes Agatha Christie to introduce one of his absolute favorite managers. He's talking about the one and only Rose Blumkin, or Mrs. B, the founder of Nebraska Furniture Mart. At 94 years young, she was still working 7 days a week, just running circles around her competition. Buffett loved to say she was still gathering speed. This deep respect for amazing businesses and the incredible people who run them, well, it leads you straight to the real heart of his whole strategy. You have to adopt the mindset of a true business owner. Buffett draws a really clear line in the sand here. An investor, he says, thinks like a business analyst. They care about the long-term health and value of the company. A speculator, on the other hand, just thinks like a market analyst. They're obsessed with transactions, seeing stocks as just little pieces of paper to be traded. And once again, he pulls out a classic line from Ben Graham to hammer this home. In the short term, right, the market is just a popularity contest. It's a voting machine driven by hype and emotion. But over the long haul, it becomes a weighing machine, where the true fundamental value of a business is what really counts. And for Buffett, you have to understand, this isn't just about making money. It's about how you live your life. He says it flat out. He would rather get a good return working with people he genuinely likes and admires than a great return with people he can't stand. He uses this incredible quote from Winston Churchill to explain his thinking. The companies you choose to own, the people you choose to partner with, they end up shaping you. Your investments really do become a reflection of your own character.
So when you pull all these ideas together, what you get is a really simple but incredibly powerful playbook for not just getting through a tough market, but for actually thriving in one. So let's recap. First, let Mr. Market serve you. Don't you dare let him guide you. Second, hunt for those wonderful, maybe even boring businesses run by people you can trust. Third, when you buy something, go into it with the mindset that you're going to own it forever. And finally, and this might be the most important, you have to build a mental fortress to protect yourself from all the emotional noise of the market. When it comes right down to it, Buffett's genius isn't some secret formula he's hiding in a spreadsheet. It's something much simpler, but a whole lot harder to actually do. It's combining solid business judgment with unshakable emotional discipline. That was the lesson from the storm of '87, and it's just as true today. Which really leaves us with one final thought, right? If you look beyond just the stock market, what is that one emotional, volatile Mr. Market in your own life that you could probably benefit from tuning out so you can focus on what actually has real long-term value?